Hey everyone, welcome to Modern Thinking. Welcome to Modern Thinking. The purpose of our channel is to provide simple to understand content that breaks down each topic and helps you understand the concept rather than just understanding the definition behind each term. Today, we are going through the basic differences between an FHA and a conventional home loan. Together, we can help you decide which home financing loan is better suited for your situation. So, stick around and don't forget to smash that like and subscribe button for more awesome content. With that, let's get started. Hello, everyone. Now, before we discuss FHA and conventional loans, please remember that we are not a lender, a broker, or a mortgage professional, so understand that the topics discussed today are for entertainment and educational purposes only. With that out of the way, let's dive right in. Now, there are two popular types of home loans. The first is referred to as an FHA, which is backed by the Federal Housing Administration. So, essentially, it's insured by a government agency. FHAs are attractive to most because it provides an individual the opportunity to purchase a home with a lower barrier of entry. The current loan limit for FHA loans range from $331,760 to $765,600. And they do vary county by county, so make sure you check how much you're eligible to qualify for based on the area you are looking to buy. Now, the qualifications to be eligible for an FHA loan differ slightly, but the following are good guidelines to look into. Number 1, your credit score must be in good standing. The minimum to qualify can be a credit score of 580, but that depends on your lender. So, a good rule of thumb is to shoot for a 600 credit score to ensure that you're good across the board. Number 2, for an FHA, you must also be able to provide a down payment of at least 3.5%. So that means if the home you are looking to purchase is priced at $300,000, then you must be able to put a 3.5% down payment of that purchase price. $300,000 divided by 0.035 gives you a down payment of $10,500. Now, if you have a lower credit score and do not qualify, then they will significantly raise that down payment percentage. So making that minimum qualification credit rating is key to getting that 3.5% rate. Those are their basic qualifications. Get a decent credit score that meets their standard and have the capital to put at least 3.5% down. Now, since they are providing guidelines that many individuals can meet, the Federal Housing Administration Agency also takes precautionary measures to ensure that they don't lose out on the investment they are making with you. So that means financing with an FHA holds you responsible to pay what is called a mortgage insurance cost. This protects them from losing money in case you are not able to make your mortgage payments and you default on the loan they give you. They usually require an upfront fee of 1.75% of the loan amount, which you can pay when you close, or you can roll it into the loan amount, which will increase your monthly payments, obviously because you're going to be borrowing more. On top of the upfront premium, they also add a monthly premium that ranges between 0.45% to 1.05%, and this will be valid until you pay off the entire balance. So, low barrier of entry? Yes. But they do stack on costs so that they too can make money by making the home buying process initially more affordable. Now on to conventional loans. Conventional loans are insured by private lenders, so they do require a higher credit score. Best rule of thumb is to aim for at least a 620, but the higher your credit score, the better chances you have of getting approved for a better rate. Just like FHA, these loans have loan limits, and they also do vary county to county as some regions have a higher cost of living, so make sure you check up on that. Now, these private lenders will look at a few matters. The first will include your debt-to-income ratio. The minimum ratio you should strive for should be 40% or lower, meaning your debts cannot take up more than 40% of your gross income. If you make a decent living but you're drowning in debt, then you are a bigger risk to the private lenders, because why should they loan you money if you still owe so much more money to other entities? They have to weigh the pros and cons, because if you lose your job and you can't pay, then that means they're taking a loss on you. Second, you might have heard that conventional loans require at least 20% of the loan amount as a down payment, and that is usually true. But if for some reason you cannot come up with a whole 20%, then they actually can provide you with another option. Let's say, for example, you're only able to come up with 15% of the home price as your down payment. Then they will give you the option of paying a private mortgage insurance, aka PMI. That's because a smaller down payment means more risk for them. So offering a mortgage insurance, much like what is provided through an FHA, means they can reduce risk in the event that you can't make your monthly payments. And just like the FHA, this cost gets rolled into your loan and increases your monthly payments. So to summarize, which home loan is better for you? If you want to own a home but have lower credit and not a lot of capital, then you can utilize an FHA loan to help you get that dream started sooner rather than later. Or if you have a higher credit score and more capital, then you can utilize a conventional loan and avoid paying a mortgage insurance, which will actually lower your monthly payments. Now, just because you fit in one of these categories does not mean go out and purchase a home on impulse. Rather, use this as a guideline to see if you are financially and mentally ready for home ownership. Get all your ducks in a row, ensure that you have money saved up even after purchasing the home for any emergency expenses that may arise, and that you know you are financially secure to make this decision. Anything is possible if you put the efforts towards it. Do your research and set up game plans to help you reach your financial goals. Thanks for watching, everyone. Be sure to leave a comment, like, and subscribe to the channel and start your journey to financial freedom today.